Good evening, friends. Allow me a few seconds to start my presentation. Friends, our today's topic for discussion is GST practitioners, time to learn digital business. So in this session, we'll try to discuss about tax invoice and its components. Then we'll discuss about components of tax, which is GST, HSN code and SSC codes, consolidation of transaction, GST ledgers and reports, challan and payment, then e-signature and filing. So let us start with tax invoice and its components. And before we start the tax invoice, first of all, let's have a background about the digital system or digital tax administration system which the government has put into place. I have been discussing in detail about digital tax administration system in my previous webinar, but for those who have not attended the previous sessions, for them digital tax administration could be something new word. So I'll briefly try to touch upon the digital tax administration system. Friends, in case of GST, the government is putting up a unique tax administration system wherein central government, state government and taxpayers, they all will be connecting through a common interface, and there will be a shared IT infrastructure between the states and central government. And in this tax administration system, all the business processes along the line of tax administration are going to be automated, and there is no role for human intervention. Starting from filing of returns, like we have electronic filing of returns in the GST system, all the taxpayers will be required to submit their returns electronically. Then there will be electronic accounting. There will be electronic cash ledger and electronic credit ledger which will be maintained at GST portal, and the taxpayer will be required to reconcile these two ledgers with his own accounting records. Then there will be electronic matching of data. See, I'm sure you all are aware that the invoice level data between the taxpayer and the recipient, supplier and the recipient, will be matched by the GST system using various software techniques, data mining, pattern recognition techniques for matching the data. And in the last stage, the assessment will also be electronic assessment. There will not be any human intervention, meaning thereby that in past we are familiar with the traditional way of assessment where the practitioner has to go multiple times to the assessing officer, submit various details, and then the assessing officer makes the assessment. But here there is no role for human intervention. Even the assessment will be made by the system itself. Now tax invoice, I'm sure most of you will be familiar with the format which the GST rule has prescribed. And this tax invoice contains certain components like supplier details with its GSTIN number, receiver's detail with its GSTIN number, date of invoice, tax invoice number, HSN code and SSC code, tax pay, tax type and tax rates, and tax and amount. So these are the important components of tax invoice. Now here you can see the components which I have discussed earlier. They are visible on the tax invoice itself. For example, the taxpayer's name and its GSTIN number, then the recipient's name and GSTIN number, then third is invoice, date of invoice, then fourth is invoice number. See, this invoice number, I'm sure you are aware that there is a rule which requires this invoice number to be consecutive and it should be generated by the computer system. Then the fifth item comes the HSN code and SSC code. All the line items should be tagged with the HSN code and SSC code. Then the sixth is the tax component. So these are the important items or components of tax invoice which should have the correct data, because this data will be matched between the supplier and the recipient. Now component of tax which will be in part of the tax invoice will include CGST or central GST, SGST means state GST. UTGST means GST which is applicable in union territories. Then integrated ST which will be for transfer of goods from one state to another state. Then cess, and once this tax has been put into the invoice and invoice has been generated, thereafter these tax amounts cannot be changed in the invoice. Now IGST is integrated GST which is applicable in case the transaction is interstate transaction. The supplier and the recipient are situated in two different states. So this place of supply is mentioned in the invoice, and based on the place of supply, if the supplier and recipient are situated in different states, then integrated GST is applicable. And in some cases, cess is also applicable in addition to the GST or SGST, IGST, cess is also levied. For example, this Coca-Cola and all, there the GST is applicable at the rate of 28%, and then in addition to that, cess of 12% is also applicable. Now CGST is central GST, means in case of transaction, intra-state transaction, when the transaction happens within the state, there are two kind of tax which are levied. One is CGST, another is SGST. And the CGST portion, which is central GST, this goes to the central government, and SGST means state GST, which goes to the state government. Now nomenclature of goods and services needs to be mentioned in the tax invoice. So for example, in the given invoice, the line items should have the HSN code, or in case of it is services, the SSC code should be attached to that line item. Now place of supply is also mentioned in the tax invoice. Place of a supply determines which tax will be applied, whether it will be CGST plus SGST or it will be IGST. So depending upon the place of supply where the supplier and recipient are located, the rule for place of supply is applied for a particular transaction, and it is determined which tax to apply. Now friends, you must have seen in the media reports that finance minister's statement was published that invoice level data between the supplier and the recipient will be matched. Now this data matching will be done, will include consolidation of transactions, then mismatched entries will be segregated, and reversal of tax and return entries and entries other than taxes. Now all the transactions will be consolidated here in the form of a report and dashboard, and it will be made available to the taxpayer by way of a report at the desktop itself. Now within this consolidated report, the taxpayer can download the data mismatch reports from the GST portal, and an example of those data mismatch reports is shown on your screen. There will be two data mismatch reports. One will be receiver mismatch report, where you can see there are, say, 3 invoices where the taxable value of invoice is different from receiver's point of view and supplier's point of view. For example, in case of first invoice, you can see the receiver is showing the taxable value as 1,10,000, whereas the supplier is showing the taxable value as 1 lakh rupees. So this taxable value has a direct impact on the tax amount. So we can say there is a mismatch credit of rupees 2,000 in the first invoice. Then in case of second invoice, there is a difference in the taxable value. The receiver is showing the taxable value of invoice as 1,20,000, whereas the supplier is showing as 1 lakh rupees. So its impact on tax amount credit is about 4,000 rupees. In case of third invoice, there is taxable value as per receiver, the taxable value is 2,30,000 rupees, and as per supplier it is 2 lakh rupees, which has impacted the tax, and the mismatch in tax credit amounts to rupees 6,500. Similarly, there will be supplier mismatch report which will be downloaded by the taxpayer from the system. Now here we have an example of taxpayer mismatch report where the mismatch amount is, say, in case of taxable value, the supplier is showing the tax amount, invoice amount at rupees 1 lakh, whereas the receiver is showing 1,10,000, and its impact on the tax liability also, and the difference in tax liability is rupees 2,000. And in case of second invoice, the taxable value shown by the supplier is rupees 2 lakh, whereas the receiver is showing as 2,05,000 rupees. So total amount of credit is 41,000 rupees, and the amount of mismatch in credit is 1,000 rupees. And in the last invoice, the taxable value shown by the supplier is 1,50,000, whereas the receiver is showing 1,52,000, and the difference in the output tax liability is 400 rupees. Now, based on this report, individual mismatch entries can be segregated. So for example, on your screen you can see one mismatch entry of a particular invoice which has different amount from the receiver's point of view and the sender's point of view. Now, supplier will get the credit, recipient will get the tax credit, input tax credit, based on the invoice data which is submitted to the GST portal. But in future the difference could be reversed, and there could be some reasons for reversal. For example, if the purchaser doesn't deposit the tax which he has collected from the supplier within, say, 90 days, then the ITC credit gets reversed. Then second is, if the buyer does not make the payment to the supplier for the invoice amount, then also the input tax credit could get reversed. There could be for the more reasons. For example, after the issue of invoice, there has been a debit note which has been issued. So these could be the reasons for which input tax credit could reverse, and this reverse entries will be passed at GST portal. Now, for entries other than tax which could be there in the system, could be for, say, interest, penalty, fees and others. And for tax there would be CGST, IGST, cess and state government tax, which is Tamil Nadu state government tax. No entries other than tax, we will have electronic liabilities ledger, electronic credit ledger, electronic cash ledger, and for these three ledgers we'll have reconciliation and auto generation of reports. Now, entries other than tax, let us start with electronic tax liability ledger. So here we have from GST account the total amount of tax liability which is shown in the compliance software, and then the mismatched items also, which are the items which are not matching between the GST system and the taxpayer's record, that will be shown by the compliance software. Now, before coming to electronic cash ledger and electronic credit ledger, I'll just try to briefly touch upon these two ledgers so that you understand the purpose of this ledger and its meaning. See, electronic cash ledger is basically the amount of tax which has been deposited by the taxpayer. That amount is credited in electronic cash ledger. So this payment can be used in subsequent period or in future for, say, payment of taxes, and payment of taxes with major head as taxes and subheads as CGST, SGST, IGST and UTGST. And it could also be used for payment of interest, penalty, fees, etc. Now there is another ledger which is electronic credit ledger. Electronic credit ledger is basically the ledger maintained at the GST portal in which the input tax credit for which is receivable to the taxpayer is credited, and the amount credited in electronic credit ledger can be used for payment of taxes. Friends, please note that this cannot be used for payment of interest, penalty, fees or cess. It can only be used for payment of taxes. Now, electronic credit ledger. See, electronic credit ledger is basically where we are entering the ITC credit for which the taxpayer is entitled to. And here the mismatch, the compliance software will do the reconciliation and it will show the mismatch items for which the input tax credit has not been received in GST portal. Now for electronic cash ledger also, the compliance software will take the data from GST portal. It will try to reconcile it with the accounting records, and then in case there are any mismatch items, it will show those mismatch items separately, and then the taxpayer can reconcile these items. Now for reconciliation, the GST and dashboard will provide the information of mismatched item. This will be available at the GST portal, which taxpayer after logging in can find out these reports, and it can download the reports. He can reconcile it with the supplier or the receiver. Now there will be auto generation of reports in case of returns filing. Friends, I have discussed in the first slide itself that this tax administration system is going to be completely digital, and all the processes along the supply chain of tax administration are going to be automated. So here only one return is the taxpayer is filing only one return, which is GSTR 1. The other two returns, which is GSTR 2 and GSTR 3 monthly return, these are being auto-populated by the system. See, GSTR 2 return will be auto-populated by the system, which will be given to the taxpayer for the purpose of reconciliation. And GSTR 2 is basically the inward supply of goods and services. This data will be given to the taxpayer for the purpose of reconciliation with his accounting records, and then uploading the data at GST portal. And then the monthly return, once the GSTR 1 and GSTR 2 is finalized, then based on these two returns, GSTR 3A or the monthly return will also be auto-populated by the system. It will be given to the taxpayer for his acceptance, and once it accepts it and makes the payment of taxes, then monthly return can be uploaded at GST portal. Now, challan and payment, creation of challan for payment and electronic and cash payment. Friends, at GST portal, the taxpayer will be required to create the challan by putting the amount in various heads and subheads, interest, penalty, fees, etc., and create it. And after creation of the challan, then the payment of challan can be made for the tax liability. This payment can be made electronically through RTGS, NEFT, by using debit card, credit card. The taxpayer has the freedom to register any debit card and credit card with the GST portal, and then make the payment of taxes by using this debit card or credit card. He can also make the payment of taxes by way of cash or check deposited in the bank account. Now, this GST returns which will be filed will also be required to be signed electronically before submission. Now, as I have mentioned in my first slide, that all the returns are going to be filed electronically, so there is no human intervention. So there is no return which will be prepared in hard copy. Not only the returns, all the communication between the taxpayer and the tax administration systems is going to be digital. Friends, that was about a brief discussion on our today's topic. And before we take up the question, I'll like to share with you this LinkedIn group. Friends, GST is a new subject. Everyone is facing some or other new problem. So I have tried to create a group at LinkedIn wherein more than 180 GST experts from all over India are participating. In case you are at LinkedIn, you can please join this group, and there you will find latest development on GST. You will also find various discussions on topics like the topics of common interest. People are sharing the problem. In case you have any practical problem, you can also share this problem, and some or other expert will answer to your queries. Now friends, in case you have any questions, we can take up those. Hello friends, in case there are any questions, we can take up those.
I can't find any questions here,
Okay, so that means my guess is because one is that the practical work has not started, then another is there's lesser sharing of information on practical aspects of GST return preparation and filing. That is the reason people are not able to raise questions on the presentation. But friends, in case you have any questions in the future also, you can please write a mail and we will try to answer to your questions. Now we have for the co-founder of Gov Reports also with us, Mr. Nagaraj, Veera Nagaraj, and I'll request him to share some of his thoughts on this practical aspect with you. Raj, over to you, please.
Okay, thank you, Vinod. Thank you for your beautiful presentation. As you explained in the initial stage itself, this is total digitalization. This GST implementation in India is complete digital transformation of taxation. That is what we are calling one nation, one tax, one market. All these things coming under digitalization only. That means one tax invoice, it is generated and supplied, issued to a buyer means the components whatever Vinod explained today, that cannot be changed in any part at any point of time. Whatever issued, that has to be amended with the consent of the buyer as well as the supplier. So that is the way the mismatched entries can be rectified. So when you see these sales and purchases related to this GST area, every time it has to be auto matched. That means once the tax invoice is generated, that tax invoice has to be amended with the consent of the other party. Then only the mismatched entries can be automatically corrected and it can come into the GST reports. So yes, I was discussing with Vinod, there are three major components which has not highlighted so far that we need to understand when it comes to the digitalization part. One is the actual business transaction, what is taking place is the important part. The second thing, the GSTN, which is going to levy penalty, interest, fees and other charges. This is the second component. And the third component is very important, which hasn't come to our knowledge and which hasn't come to our practical aspects of doing a GST report. That is the reversals of items, which Vinod is showing in one of the PowerPoint, the reversal items. What is reversal items? When you look at the actual GST report, when it is submitted to the GSTN, that is the final stage. But the real business, it cannot go like that. There could be so many changes could take place, and including the date. For example, the supplier is issuing one goods and issuing a tax invoice on the last day of the month, which is received by the other person the next month. Or next month, if the complete payment made for the tax invoice may be returned by the buyer in the subsequent month. So when these type of things are happening, the GST reports already submitted with the GSTN, that has to be reversed. So these type of reversal items, two areas it is possible. One is from the supplier side, another one is from the receiver side. The whatever errors, the mistakes done by the supplier, it has to be corrected by himself. That is one point. The second point is whatever errors committed by the receiver's end, that has to be corrected by the receiver end. So when these type of things are happening, the reversal item, it comes from the GSTN. So this item will be picked up in the subsequent months so that your GST reports will be automatically updated into the cash ledger. That cash ledger will come into the electronic cash ledger and credit ledger side. All these things, it will come over there. So that data matching, reconciliation of reports, all these things are very important. Everything, it is going in the form of digital transformation. This is what our understanding from the software side. So if you have any other questions related to the digital area, we are very happy to get the queries from you, questions from you, which we are ready to reply to you. Vinod, is there anything else, Vinod?
No, I don't think we have anything to add to it. In case our friends have any queries or problems in future date, they can also always send us a mail and we'll try to answer to their queries in the next 24 hours. Thank you, friends.
Okay, thank you everyone.